In this video, we will cover the manual process for posting journal entries to the ledger. I'll discuss the manual process, which is obviously somewhat irrelevant considering how computerized the accounting field is. However, I decided to cover this topic just in case your class does the same, and knowing how the manual process works may facilitate understanding the computerized process. First, let's discuss some terms. We've already talked about the general ledger. The general ledger refers to all of a company's accounts, particularly its balance sheet and income statement accounts. Next, we have our subsidiary ledgers, or subledgers as is sometimes known. The subledger combines a large number of individual accounts with a common characteristic, such as customers or supplies. Finally, we have the controlling account. The controlling account is the account in the general ledger that relates to a particular subledger. This is the account to which the balances within a specific subledger should reconcile. Consider the following pictorial representation. These accounts would make up a company's general ledger. We could look at each of these accounts to see its current balance or previous balances within the period. Our credit customers would likely have their own subledger. This collection of customer records would show in detail how much each one of them had purchased from, paid to, and currently owes us. Accounts receivable in the general ledger would be the controlling account for this subledger. Meaning, at any given point in time, the balance in accounts receivable should tie to the combined balances of the customer subledger accounts. Similarly, we would have a separate subledger for our vendors or suppliers. Like that for our customers, this subledger would show how much we've purchased from, paid to, and currently owe each vendor. Accounts payable would be the controlling account for this subledger. Again, the combined balances of each record in this subledger should reconcile to the current balance in accounts payable. Now that we've talked about our ledgers, let's talk about how amounts will be recorded to them. We'll do so using special journals. Special journals are journals used to record specific types of transactions. Think of the journal entry for a credit sale. We debit accounts receivable and credit sales. It's the same entry each time we record this transaction. So we can record these entries more efficiently using a revenue journal. Every time we need to debit accounts receivable and credit sales, we just put the transaction in the revenue journal. Receiving cash is another common and repetitious journal entry. We debit cash and credit accounts receivable. These transactions will be recorded in a cash receipts journal. On the flip side, we'll have special journals for credit purchases and cash payments. Every time we need to debit an inventory account, be it merchandise inventory or supplies, and credit accounts payable, we'll put it in the purchases journal. Whenever we debit accounts payable and credit cash to pay off that liability, we'll record that transaction in the cash payment journal. Finally, we have the general journal. This journal is a catch-all journal for recording any transactions that don't neatly fit into one of our special journals. So far in my videos, every journal entry has been presented as it would be shown in the general journal. I'll almost certainly continue with that format in my subsequent videos, but for the purposes of demonstrating the manual process for the rest of this video, I'll make use of the special journals. If you need to understand this topic for your course, watch on. If not, I recommend still watching. Doing so will instill an appreciation for how efficient tools like Excel and QuickBooks make modern accounting. Here we see our first special journal, the Revenue Journal. Remember that this journal is used for recording credit sales. Consequently, we don't need a debit and credit column. Every amount in the far right column indicates a debit to accounts receivable and a credit to fees earned. Our other columns are somewhat self-explanatory. We see the date of the transaction in the date column and the invoice number in the invoice number column. The account debited column provides us with the name of each transaction's customer. The posting reference column is where we'll put a check mark after posting to the ledger. It may not seem necessary with this example, but if you have a long list of transactions to post and you're looking back and forth between sheets, losing your place is especially easy. Seeing a check mark helps you find the last entry you posted and helps prevent an entry from being double posted. In the top right corner, you may also notice the page number for this journal. With all of that explained, let's post these entries to our ledgers. We'll start by posting each item to its relevant subledger. Our first sale was on August 2nd to Cloud9 for $2,100. We proceed to the Cloud9 account receivable subledger and record our entry. Much of the same information from the journal gets recorded here. In the posting reference column, we put the page number of the journal where the original entry is recorded. The R35 indicates that this entry is on the 35th page of the Revenue Journal. Doing so allows a manager or an auditor to trace this entry back to its original recording. We then return to the Revenue Journal and place a check mark in the posting reference column, indicating that this transaction has been put in the subledger. We'll repeat this process for HapZone on August 6th. Go to the subledger for this company, input the entry, including the R35 for the page number, then place a check mark in the PR column. Repeat again for QuickSpace on August 18th. And Cloud9 again on August 27th. Once we've finished posting to the subledger at the end of the month, we book these amounts to the general ledger accounts. Sum the last column, and we see we have a total of $9,375. Now we proceed to our AR general ledger account and record that debit total. Just as in the subledger, we put R35 in the posting reference column. Again, someone checking our work or investigating a different issue could start on the accounts receivable general ledger and know where to find the original entry if something needs to be verified. We come back to the Revenue Journal and place a 12 under that total. 12 is the account number for accounts receivable. Putting this number under the total functions much like a check mark. It indicates that a debit has already been posted to accounts receivable and prevents against the amount from being double posted. Do the same thing for fees earned. record the information in the Fees Earned General Ledger, then put the account number 41 under the total in the Revenue Journal. Again, this helps ensure that the amount won't be double posted. I know this process may seem excessively meticulous, but if you're posting a long list of entries, fatigue can easily lead to such simple mistakes. As the saying goes, an ounce of prevention is worth a pound of cure. At this point, we should be able to reconcile our controlling account, accounts receivable, to our subledger accounts. We have a $12,775 debit balance in the general ledger. If we sum the $5,200 for Cloud 9, the $1,625 for HapZone, and the $5,950 for QuickSpace, they total to $12,775. Next, let's consider the Cash Receipts Journal, or the CRJ. This journal is only marginally different from the Revenue Journal with one new addition. Beginning in the top right corner, we still see the page number of the journal. Our first three columns function just like those of the Revenue Journal. We have the date of the transaction in the first column, the account being credited in the second column, and we'll put a check mark in the third column after we post each entry. With cash receipts, we know that we'll always be debiting cash. So every transaction on this journal will have an amount in the cash debit column. However, a company can receive cash from multiple sources, so we have two possible columns for our credit accounts. If we're collecting an account receivable, the amount will go in the AR credit column. Alternatively, if a customer pays cash immediately, or in this specific case, we receive rent revenue from a tenant, the amount will go in the other account credit column. Starting with our first item in the cash receipts journal, we'll see the difference. This company doesn't have a special journal for rent revenue. Not that one can't exist. An apartment complex, for instance, may have such a journal since so much of its revenue comes from rent. But in this case, rental revenue is an incidental item, so we'll just post it to the general ledger account for rent revenue. In the PR column, we put CR14 for Cash Receipts Journal, page 14. When we return to the Cash Receipts Journal, instead of a check mark, we put the account number in the posting reference column. As in the Revenue Journal, this helps prevent a double posting. In addition, since the account being credited here could be nearly any number of accounts, for example, rent revenue, interest revenue, sales of merchandise inventory, or notes payable, using the account number tells us where to find that credit if anyone needs to retrace our work. On the second line, we collected money from QuickSpace. So we proceed to the QuickSpace subledger. Enter the information. Afterwards, put a check mark in the posting reference column of the Cash Receipts Journal. Repeat the exact same process for Cloud 9 on August 28th, and HapZone on August 30th. Once we've finished posting all of these entries, we can update the account receivable and cash general ledgers. On the 31st, sum up our total of the other account credit column, double check that it was correctly posted to the right general ledger account or accounts, then put a check mark underneath. In this example, you could put the rent revenue account number since we only have one item in this column. But know that there could be a large number of items here, each going to a different account, which could make things cramped. So a single check mark will suffice. Next, we sum the total of the account receivable column. Post that to the account receivable general ledger and put the account number underneath to signify that the amount has been posted. Finally, do the same for cash. Sum the total, post to the cash general ledger, and put the account number underneath. After posting all the items, we can reconcile our account receivable subledgers to the account receivable general ledger. We have a $5,650 debit balance in the AR general ledger. If we sum up the $3,100 owed to us by Cloud9, the zero balance in HapZone, and the $2,550 balance for QuickSpace, you'll get $5,650. If you followed how we posted the items on the revenue journal, and especially the cash receipts journal, our last two journals are handled in a nearly identical manner. The purchases journal shown before you has a slightly different structure, but it's not completely dissimilar. We have the journal's page number in the top right corner. Moving to the columns to the far left, we have our date column, the account name being credited column, and our posting reference column. The purchases journal is designed to record credit purchases. When you run a business, you'll make so many purchases on a sporadic basis. It's oftentimes easiest to purchase on credit than pay off the balance next month. The purchases journal is where all these entries are recorded. Most commonly, a business will purchase supplies. So most entries in this journal will consist of a debit to supplies and a credit to accounts payable. However, other items can be purchased on credit as well, in which case supplies will not be the only debit. For this reason, this journal has a few additional columns. Most of the time when supplies are purchased on account, we'll put the amounts in the AP credit column and the supplies debit column. On the third row, when equipment was purchased on credit, the supplies debit column was left blank. Instead, the last two columns are filled out. The amount goes in the final column, and the other account being debited the column prior. Note that there is a plethora of accounts that could be debited besides supplies, from office equipment, as seen here, to store equipment, to merchandise inventory, and so forth. So we need a description column to indicate which one. Of course, we also need to have a separate posting reference column for after we post to this account's ledger. Our purchases journal explained, we can now post to our subledger. Our first transaction for the month was on August 3rd for H&S Supply. So we post to that particular account subledger. The balance in the far right column indicates a credit balance because these subledgers are for accounts payable. If we ever see a negative number in one of these columns, that indicates a debit balance and should probably be investigated. We put P11 in the posting reference column for Purchases Journal, page 11. Afterwards, we return to our Purchases Journal and put a check mark in the posting reference column. Do the same thing for Derringer Logistics on August 7th. Post the subledger, then put a check mark in the Purchases Journal. Repeat this process for Paget Business Systems on August 12th. Derringer Logistics once again on August 19th. And once more for H&S Supply on August 27th. At the end of the month, we can post to our general ledgers. We begin by summing our total in the accounts payable credit column, then post the amount to the accounts payable general ledger. Return to the Purchases Journal and put the account number under the sum to serve as a check mark. Sum supplies, then post to the supplies general ledger. Once again, return to the Purchases Journal and put the account number under the sum. For the other accounts being debited, these could go to a number of separate accounts, so posting them separate is best. In this case, we only have one amount going to office equipment, so post that amount to its general ledger. Then put the account number in the PR column. Again, use the account number instead of a check mark because we can't presume which account receives the debit from this column. Once that's done, sum the total of this column, check back that every item in it was posted to the general ledger, and put a check mark underneath it to verify it's complete. After everything has been posted to the subledger and the general ledger, our accounts payable general ledger should reconcile to the totals of the accounts payable subledgers. We have a $7,480 credit balance in our accounts payable GL. If we sum the $1,990 credit balance for Derringer Logistics, the $1,230 balance for Grayson Computer Supplies, the $1,560 balance for H&S Supply, and finally the $2,700 balance for Paget Business Systems, these amounts will sum to $7,480. Finally, we have the Cash Payments Journal. The 4 special journals covered in this video aren't necessarily the only special journals one may encounter, but they are probably the most common. And the methodologies for posting their entries to the general and subledgers will apply to nearly any other journal or ledger. The Cash Payment Journal format you see here is nearly identical to that of the Purchases Journal we just observed. We have our page number in our top right corner. Within the body of the journal, we have columns for each transaction's date, the account being credited, a posting reference column for our check marks, and where the amounts are to be debited and credited. With the cash payments journal, since cash is being dispersed, the cash account will always receive a credit. For this reason, each row will always have an amount in the cash credit column. Most commonly, cash is dispersed to pay off an account payable, so the account payable debit column will usually receive the debit. That said, we can disperse cash for other reasons, so a different account may be due the debit. Thus, we have the other account debit column. Between these two columns, only one will have an amount in it. Hopefully the process is especially familiar to you now. You could possibly take a screenshot and post the entries yourself. Our first item is a rent expense on August 2nd. Most likely, rent expense won't have a subledger, so we post this amount to the general ledger. Afterwards, put the account number in the PR column. On the 15th, we paid off the balance for Grayson Computer Supply. So post that debit to the Grayson Computer Supply subledger. As an account payable subledger, the balance is presumed to be a credit, as I previously discussed. Consequently, this debit will reduce the balance to zero. Next, check off the posting reference column in the cash payments journal. Repeat this process for Paget Business Systems on August 21st, Derringer Logistics on August 22nd, the utilities expense on August 30th, and finally H&S Supply on August 31st. At the end of the month, we post or check our postings to the general ledger, as the case may be. Beginning with the other account debit column, we already posted these amounts to their respective general ledgers. So we sum the total, check that it matches to what we posted, then put a check mark underneath. We use a check mark as opposed to the account numbers because depending on how many entries we have on this page, we could have a bunch of debits to different expense accounts. If we put each account number, this space could very easily become cluttered, so just use a check. With account payable, sum the total, post the account payable general ledger, then put the account number underneath the total. Repeat this process for the cash credit column. Sum the total, post the cash general ledger, and put the account number underneath. Once everything has been posted from the cash payments journal to all of the subledgers and the general ledgers, the accounts payable GL should reconcile to the sum of the accounts payable subledgers. we have a $2,710 balance in the accounts payable general ledger. If we combined the $1,550 balance for Derringer Logistics with the zero balance for Grayson Computer Supplies, the $1,160 balance for H&S Supply, and the zero balance for Paget Business Systems, you'll get $2,710. The very balance in the accounts payable general ledger. That concludes this video. Thank you very much for watching. Please come back for the next one on inventory flows. If my videos are helping you and you want to return the favor, you can thumbs up this one, leave a comment, and so forth. If you really want to help, temporarily subscribe to my channel. Not forever, just for however long you're taking your accounting courses. Finally, consider sharing my videos with your fellow classmates and possibly your professor. I'd like my videos to help as many students as possible, and I wouldn't mind getting some input from contemporaries. Thank you once again, and I'll see you in the next one.